Hello again traders, Andrew Curry here, and if you're new to this channel, please give me a like and subscribe. So, I've been getting a lot of emails in response to recent videos asking questions about structure. So, this you'll recognise from previous videos, link in the description if you haven't seen it. So obviously we had this consolidation zone we've been looking at on the AUDCAD, and you can see previously where I'd marked with arrows, clear structure point, support and resistance point where the price was not going to go any higher or lower. And the 2 points are marked in black lines here. And of course, we looked back and we saw examples of where it had touched this line before, like that, for example, and like that, for example, and we'd seen a reversal. Confirmation of the fact that it's a structure point, see, and we went back and so on. So one of the things people have been asking is, okay, so this is a structure point. Okay, here's an example. Here's an example. Here's an example of where price hit this area, this line, if you will, and reversed. But we also see, quite obviously, plenty of times when it hit that line and it continued through, right? So what's to say it's a structure point? You're just saying, well, these times it hit and didn't go through, other times it hits and price did break through that point. Okay, so first off I would say, okay, look at an example like this. There we go. Look at an example like this. Okay, so it went through. Well, not quite, because price was trading bearish, it hit this point, and then it hit the point, and we saw a little rebound. Now, ultimately, the selling pressure was enough that it went through, but we didn't really see no evidence of the level being there. So even where it broke through, you can still see it breaks through with some difficulty. Are there any other examples? Okay, so if I just move that, okay, if we look at this one, we see came up, hit the structure point, price back down, came up, hit the structure point, and look, we got it's well look, the close was right on that point where I've got my line, and then we had a not quite a doji but almost a doji candle, and then we had a little retracement bearish before it subsequently bullish pressure did break through. So even in areas where we can see it broke through, we can see that it didn't quite break through easily. There was some sign of the level being there. So the way I like to think about structure, okay, is if we move along, right? Let's imagine we've got a price, okay? We're on a currency pair and price is moving in the bearish direction. Let's just say, I mean, I'm on the Aussie CAD here, but let's just say this is the pound against the US dollar because I'm British. Price is traveling bearish, quite strong bearish movement, okay? And let's say price on this pair is at the lowest point it has ever been in the history of the pound and the US dollar. We're now trading at the lowest price that we've ever had, okay? The previous lowest price being, let's say, above the arrow here. So price is traveling bearish. Eventually, we're going to get a retracement bullish again, because eventually we're going to get to a point where there just aren't any more sellers. A lot of the people who've been trading short will now take their profits, so they'll have to buy. And so we will see a retracement, okay? When we were initially traveling bearish, we had no structure looking left because the price was the lowest it had ever been. So if it's the lowest it's ever been, there's no structure looking to the left. There's no way to judge where that end of the bearish movement and the bullish retracement is going to come from. Certainly not by using structure. But there's still quite a considerable bearish pressure. And so we start to see price fall again. At any point here, this bearish movement, continuing, could stop, and we could see another movement in the bullish direction. But when we hit this point, We now have some structure looking left. Okay, we were traveling at the lowest this pair has ever traded, and it reversed at this point. So now there's an increased probability of more traders when we get to here looking left at this structure here, now that we have some structure, and saying, well, hang on a minute, lots of other people said no lower. At this point they said no lower. We now have an increased probability of traders at this point saying, oh, I'm not going to push my luck, I'm not going to push it, I'm going to close my position at this point. And hence we start to see a lot of those people who've been selling, closing positions, taking profits, and so on. So what we start to see is, now that we have some structure, we have a previous point where traders have previously bailed out of a short bearish position. That's not to say that price will reverse at that point. If we could be certain that price would reverse at that point, we would just mortgage the house and bet everything on a bullish reversal and trade that move and make a fortune. That's not the way trading works, as we know. But the probability of there being more traders now switching position from short to long, from bearish to bullish, is higher at this structure point than it is anywhere previously on that move, which I've just roughly shown with my yellow box there. So it isn't that there's a point and it just will not break, but the probability of a reversal is higher there than at any point in my yellow box, for example. So that's the way I like to think about structure and understanding why we see reversals at the same point. There is simply a higher probability of a reversal there than there is at any other random point. Counter trend trading is about seeing a move, when is it going to stop and go into reverse, and we'll trade that reversal. If you do your back testing and go through and find all these times when it's hit major structure points, you will probably likely see a higher probability of a reversal at a major structure point than elsewhere at random. I suppose if you want to look at it another way, you can either be a counter trend trader and predict at the structure point, or you can just predict at random. Well, predicting at the structure point is likely to be a much better strategy than just randomly saying, yeah, I think it's gonna reverse now. And if you backtest that, you'll probably see that. Just understand that a structure point is a point at which we're more likely to see counter trend traders all saying, no, reversal now. And that's the way to think about it. At least that's the way I think about it.